The amount of stake pledged by Zee Entertainment promoters is much higher than earlier reported. Debt has been raised against 90% of their stake. If you include the indirect pledges, Zee disclosed the indirect pledges over the weekend. I repeat, as late as Friday 10 p.m. After SEBI tightened the regulations, Yatin Mota is standing by with the latest and the likely impact of these disclosures. Good morning, Yatin. Friday evening and the whole of Saturday went in Zee. Give us the takeaways.
So Neeraj, as you're mentioning in the read that 90% of the promoter stake is now pledged. Remember, SEBI has come out with norms in order to define pledge shares, and beyond a particular threshold, if the pledge increase, then of course the promoters have to disclose that. In case of Zee, now nearly 90% of their holding is pledged. Remember, this includes the indirect holding. A direct pledge would be something like a loan against shares, in which you usually deposit the shares with the lender or the trusteeship, and you get money in lieu of those shares. Number two is an indirect pledge. Through a loan agreement, there could be a lien or a charge or a indirect kind of a security with respect to your shares, and such indirect holdings or such indirect pledges have been disclosed by financial institutions. As you were mentioning, Friday late evening, Zee disclosed that particular event, in which nearly 10% of company's equity was pledged, and that was disclosed to a Russian entity called VTB Capital. Essentially, Saturday evening, the management held a conference call in order to explain the entire scenario, in which they clearly said that the SEBI regulations now even mandate the promoters to disclose the overall pledged shares, including the indirect one, and hence this disclosure. More importantly, a 90% pledged stake is nearly half of their current holding. Remember, a lot of lenders sold their shares in the open market for Zee, and more importantly, the Zee promoters also sold their substantial stake to Oppenheimer funds. That transaction also will touch upon later, but now the promoter holding in Zee is 22%, of which 90% is pledged. Of course, the management also disclosed in the conference call that this VTB Capital liability, or the loan has been already accounted for. So there is no increase in the loan liability at the promoter level after this pledge was disclosed. So the total, promoter debt stands as it is, and this is with respect to the SEBI new norms which kicked in on 1st October, which say that not only pledge shares of more than 20% of total share capital or 50% of the promoter holding needs to be disclosed with a reason. They also amended the definition of encumbrance to include direct and indirect pledges. So that is the regulation which kicked in from 1st October. A lot of company, I believe, would be now disclosing their indirect pledges also. As I was mentioning, in this June quarter, the promoters' shareholding was 35.8%, which with almost 64% direct pledge shares being reported. Now, the holding is close to 20%, with the current pledge at about 90%. So that is the fresh disclosure coming in. Punit Goenka, who was addressing the analyst conference call, also said that nearly a 2.3% stake to Oppenheimer, that sale is pending. This is because of the silent period which kicked in, because of which the transaction could not conclude. And once the quarterly results are announced within a time frame of 2 weeks, then these shares would be payable. With respect to VTB, they said that they are already in conversation with VTB in order to repay the overall debt. Of course, the loans maturing with respect to VTB Capital still are 1 year away. So that is one update, importantly, that the management said. And in terms of the loan breakup, the management gave ballpark figures, in which they said the total promoter debt in the personal capacity stood at 7,000 crores. Out of this 7,000, 5,000 is with respect to domestic NBFCs as well as domestic mutual funds and domestic entities, and the remainder 2,000 crores is due with respect to the overseas entity or the foreign lenders. So this is what the management updated with respect to their overall pledge shares, which were indirect, and also the total promoter level debt, which was disclosed to the public.
That's very interesting. Yatin, thanks so much for putting all of this into perspective. It's very interesting to see what the stock could do today, Yatin. That's my question, because, I mean, I was looking at what the brokerages have said as well. A couple of people, Axis Capital, for example, has placed it under review from a buy. CLAS has cut the target. But JP Morgan maintains the neutral. They are saying that there is uncertainty around this reduction, but they are not changing the target price or the rating as well. Any sense that you get by talking to dealers or otherwise as to what the stock will do today?
So Neeraj, on Saturday, the query or the common question or the common concern from the analyst community was that since now 90% of the shares are pledged, loans are probably maturing in the next 1 year. What happens from here on? The management said that they are also looking at the non-media end of the business, which could be sold, which includes their solar power plants. They also have various assets in the overseas market. They also have their road projects. However, the management also clarified one thing, that the lenders can sell the shares. So there is no restriction on the lenders to sell the shares and recover their dues. So clearly, the management said that the lenders are free to sell the shares in the open market. However, at the current market price, the valuation according to the management is suppressed, and whichever entity or the NBFC or any lender sells the shares in the open market, they probably are destroying value not only for themselves but also for the promoters. And in most likelihood, nobody is likely to take that step because they have a standstill, with the mutual funds as disclosed, to the public. But clearly, there was one concern that since almost everything that they own is pledged, what if tomorrow some lenders already, start selling the shares, given the insufficiency of cover which could arise, because almost every shares are, a single share is pledged. And no further security can be provided by the promoters in terms of the further pledged shares.
Well, the promoters certainly see value in intrinsic value. Sadly, the market or nobody else but the promoters is seeing this. But Yatin, thanks so much for putting this into perspective.